Okay, so talking about how much you owe, you actually don't owe anything this year. You're going to be getting a refund. If you look onto your page 1040 page 2, it's the line 76, 76A. You're going to be getting a $18,272 refund. So because of that, you don't actually have to pay anything. You're going to be getting money back. Now, as for getting this turned in, you need to get it has to be mailed in by April 15th. That is the final deadline. It has to be, if you're mailing it in as a paper copy, you have to have it postmarked by April 15th. Electronic copy, just make sure it's in by the end of the day on the 15th. End of the workday on the 15th. As for your question regarding the Schedule A, so the way we kind of got to that number, and I have that here, so your AGI ended up being about $140, give or take a little bit. So what you have to do is you multiply that by 0.7 or 7.5%, and that value ended up being more than your medical expenses, so you can't deduct any medical expenses. Then you are able to deduct all of your state income taxes this year, your real estate taxes, your personal property taxes, and those three end up adding up to about $17,000. Then you have two mortgages now. I saw so on those, one of them was $550, the other was $5,000. The two of those get to be added together and put onto line 10 of the Schedule A for a total of $5,550. Then you also have some charity. It's good for you for doing charity and all that. Your company's charity, it's $10,000 from there. That actually ends up going to your personal as part of your Schedule A. As you can see here, it ends up adding up to this 13,000 along with the because of the 3,000 that you donated elsewhere, and then your $400 that you get for clothes as well can be donated. It has to be the 400, not the 800, because you're donating it at the value that it currently is, and not the value you bought it at. So then your Schedule A ends up being that $36,330 there. As for your Schedule C, so you gave us this income statement and we walked through this. There are some things that tax purpose wise are not included. For example, meals and entertainment, you can only deduct 50% of that. You can't deduct all 100%. So that's where these little adjustments down at the bottom come from. Like I said a little bit ago, your charity, it goes to your Schedule A. You can't double dip. You can't take it here as well. So the Schedule A comes out 6,000, which is 50% of your meals and entertainment. It has to come out. And then the 205 depreciation, it has to come out as well because it's not tax depreciation. Depreciation works a little bit differently than your book depreciation. For example, with tax, we use Maker's depreciation or Section 179. Maker's, there's a table that has certain, depending on if it's mid-month, mid-quarter, half-year, all of these different things. It tells you the percent that you actually have to use for all of those. So what we did was we went through and we created a depreciation schedule for you. We did the calculations, and I can email you this, get you this information so you can see all the calculations better. But this is what it is. It has your the what type it is, to where it's mid-month, mid-year, all that stuff. And then once Section 179, the way that works is if you bought the asset this year, you're allowed to deduct all of it if you want. There is a $510,000 limit, and none of your assets were more than that. But the problem with it is that all of your makers from previous years, this year, and your Section 179 cannot cause your Schedule C to have a loss. So we were rounding to the nearest $1,000, so we tried to get it as low as we can. So what we did was we took Section 179 on your asset of the new furniture and fixtures. So this reduced your total depreciation, or increased your depreciation amount that you take, which then reduced your income statement. So while your income statement says that you made $204, we made it look like it's $349 because that's going to make your taxes quite a bit less, and is what helped produce this $18,000 return for you. So that's kind of how we got to all those numbers. Your taxable income is on your line 43 of your 1040 page 2. It ends up being $75,500-ish, a little less. But so because of where that falls for 2017, the typical tax bracket for you would be the 15% based off the tax tables that the IRS provides for us. So that's kind of where you're falling here, so there's that. Now as for next year, 2018's tax brackets for one are a little bit different. For example, the first one is 10% still, but then it goes to 12%, and it's just different percentages, different thresholds. So you kind of have to look at that next year. It's going to be a little bit different. So your tax bracket won't be exactly the same. Also, since the way we got your income so low was because we took the Section 179 and we took $381,000 on the Section 179, which was able to maximize your depreciation and minimize your income as tax purpose wise at least. So what that means is that next year, if you don't purchase more assets, you're not going to be able to take the 179 because the 179 has to be taken the year you buy the asset. So if you're expecting the company to do well and you're going to be making a lot of money, your tax bracket will likely be higher next year just because there's not the same depreciation. Something I will suggest for you is you can elect to defer your refund, meaning that, so like right now, you're set to get $18,000 once the IRS processes all this return, and then you'll get that money back. What you can do is you can elect to defer that till next year, and it will act as a payment, and it will go on your 1040 page 2 on line 65. What it'll do then is that whatever your tax amount ends up being, it will reduce that tax by $18,000. So where you won't have to pay quite as much as you might have to, and it may even end up getting you a refund for next year. As for that, all we need you to do now is sign in, and if you have any more questions, feel free to ask. I just do want to emphasize, it is due April 15th. If you don't get it in by then, there is a 5% penalty for each month that it is late. All right, have a nice day.